Hey guys, welcome back to the last video, boo, here you say, of the top trading tips video series. Don't worry though, because we're back with loads more in the next few weeks, a few months. Keep an eye out on the channel, keep an eye out for any type of videos like this. So the last one I want to talk about is strategy. And again, I'm not going to go really in depth here because, you know, it's a massive topic, but I'm going to give you some ideas and sort of things that I think are really good to implement straight away. And again, if you like this kind of stuff, hit the like, because I do more of this kind of stuff in the future. Right. First one I've got on here is, this is another good one as well. They're all pretty good. I think I may be biased because some of these are mine, but some of these are from other guys as well, other traders, and I agree fully with them. So, you know, take them if you like them, discard them if you don't. Avoid changing your method too quickly. Wow, I think that's a nice one because, let me write this down. Avoid changing your method. I'm not going to bother putting too quickly, but you get the idea. Right, what do I mean by that? Basically, I mean, listen. Too many people, I think, flick from one strategy to the next. Like, I'm going to trade currencies. Oh, I'm going to day trade the DAX. Oh, I'm going to swing trade tech companies. Oh, I'm going to do this. I'm going to do that. And don't give themselves the option to prove that perhaps that strategy isn't right for them. So assess what you're doing first. So say to yourself, I'm going to stick it out for 3 months. I'm not going to do anything else. I'm going to use this strategy in this market for 3 months. And then I'm going to assess the conditions. Too many people, I think, do a couple of weeks of a specific trading method and go, it doesn't work, it's rubbish, nonsense, this, rah, 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 and then move on to the next thing. And then again, they go, rah, this is a great thing, I want to do this, I'm now a gold trader. This is nonsense, rah, rah. And they go on and on and on, and you know this pathway, guys. And by the way, I'm not taking the mickey out of anybody because I have been there and done that myself, and maybe you're in that same position. My suggestion to you is this, is that spend some time doing the right thing, as in the plan, the strategy. If it doesn't work, okay, move on to something else that you've planned. This comes back to, what video was it, 2 maybe? I don't know, a couple of further back, go and check them out, where I talk literally about choosing the right strategy and market for you as a trader, because that's going to help you loads. And this kind of goes hand in hand with that. So my point is with this is, don't skip from one to the other, to the other, to the other. Stick it out, doesn't work, try something else by all means, but give it chance first and have a sort of reason to move on. Next one is use a demo. Now, I'm not a huge fan of a demo because I like to have skin in the game regardless of what I'm doing. I think that you've got to be very, very careful that you trade, you don't become a demo hero and think, well, I'm a genius, and actually you had no skin in the game, so you don't really know how you perform under pressure. But you know what? The demo or the sim is a handy tool. And what it can do with a demo is you can use demo mode to keep in tune with the market still without putting money on the line. So let's say you are day trading or swing trading. You've said, listen, I've made my money or I've lost money and I've got a stop loss position in, but I still want to keep on the ball. Then using a demo may be a good idea to keep yourself in tune with the ebbs and flows of the market, but perhaps you're not authorizing yourself in your trade plan to trade until the 1st of the next month and you've still got a week left or whatever. And you don't want to take a break, but you still want to kind of trade and be in tune with it, but you don't want to risk actual capital. That makes sense to me, using the demo. Another thing about using a demo is you can use it as a kind of sin bin if you like. Stick yourself on the demo. Imagine if you were employing yourself and say, listen, you're on the demo now, you've not performed very well. I'm just getting used to a new platform. You know, that kind of thing obviously makes sense as well. Getting you, so you're not making the mistake that pretty much I guess most people have made of doubling up on a position they meant to close, or all that kind of stuff, which really shouldn't be making as a trader. The other one is I've got here is daily profit targets. Now this is obviously more inclined to a day trader, but be very careful because you can't squeeze profit from a quiet market. It's just impossible. If the market's not conducive to your style of trading or your strategy, you know, you can't force your daily profit on a market. You can't say, you're giving me $1,000 today, whether you like it or not, and the market goes up and goes all day long. It's just not going to be able to do it. So be very careful, but by all means have goals and targets, and that makes perfect sense. I'm definitely a believer in that kind of thing, but being very careful about putting monetary goals on short time frames, because the market doesn't care about you. It doesn't give a what's it about you or I. It just cares about doing what it wants to do. So trying to will it to give you a daily profit to me is a difficult game. Now, a caveat to that is I know of a couple of traders who do that and they do very well out of it. Whether I haven't spoken to them for a while, whether that's still the case, I don't know. But I think let me think of the best way of saying this is that if the market conditions are suiting your strategy, then by all means have that. But be very careful about saying this and extrapolating it out if the market conditions are changing and you've got a strategy that kind of works one day, not the next, because you'll end up trying to force stuff. And the worst thing is you're trying to push it. And the other thing is, you've seen this, if you read some of the books, in fact, if you check out the video, if it's not posted yet, I'll put it up at some point, is that there's a guy, I think his goal was 20k a day or something like that, right? I'll forget which video this was from. I thought it was from Borsellino or Pitbull. Anyway, the point is, his target was 20,000 on the day. I think it was 20,000. It was a reasonable number anyway. And he got to like 19,200. Tried to squeeze one more trade out of it. And, guess what? He lost all of that and he went into negative. It is around the numbers are similar to that. But that's the point. The point is he was so pushed on that daily target. He was trying to push for something that wasn't there. And, he ended up losing a massive amount. So you've got to be very, very careful with that. Another thing I've got here is... treat yourself once in a while. It doesn't necessarily mean going out splashing out on a nice Lamborghini or something very expensive as such. I mean, it can do depending on what trading you're doing, but a meal or something to reward yourself, not necessarily for the financial aspect of trading, but for doing well. So say, listen, maybe you haven't made as much money as you would have liked to in the month, but you stuck to your rules. You've got a good strategy that seems to work now. You've made good progress. It's a good time to reward yourself with a meal or a drink or something larger. It doesn't matter. It doesn't matter the level you're putting out, but just that little reward to yourself. Say, you know what, you're doing the right thing there. Keep on going, keep on pushing forward. Because the trouble is, if you don't give yourself that kind of reward, we're going to struggle as humans to feel as if we're doing anything right. And sometimes, just to digress slightly, we can kind of put our value as a trader on our P&L or on our account size, when in reality it doesn't really work like that. Your account may be dormant and not doing much, but you're improving so much that you're due that burst, you're due that spike in kind of account value. So that's when it comes to sticking it out. The next one I want to talk about, guys, is being quick to adapt. Right, being quick to adapt, because what do I mean by this? I mean, this is a really big topic, actually, and we'll probably do another video on this. So if you like this kind of thing, let me know in the comments below as well. Help me out. Let me just cancel this. I'm trying to install something by accident here. Right. Volatility, rhythm, and conditions change. What I mean by that is a case of, listen, markets aren't static all the time. Sometimes they're volatile and they're trending. Sometimes they go quiet. So being able to adapt and change the type of trader you are is a good way. I know whether that means trading and then not trading, fine. Whether that means trading small and large, whether that means adapting the strategy or style you're using, fine. But the point is, the rhythm of the market changes. The condition of the market changes. Always be monitoring to make sure that your strategy is in tune with the market environment. And it doesn't matter if you're day trading or swing trading. It's exactly the same thing. Your job as a trader is to put your strategy, use the right strategy for the right market environment. So being aware the conditions change, they flip from side to side. And so if you're trying to force on a mean reversion strategy on a market that's really momentum driven, is trending, you're going to lose money. So understanding the ebb and flow of the market and the rhythm. Okay, another one I've got here is to expect setbacks. If you've had a big run, or if I've put setups there, I mean setbacks. Hope you can see that. My writing is not the best when I'm trying to scroll it on the board here. Anyway, point is, be ready for setbacks. Be quick to dial back that size, scale back your activity when you're out of tune. I've put here, when it happens, to limit the damage. Because honestly, guys, been there, done that, learned the lesson now. This is something that I'm good at. And other traders I know have to learn this to kind of be a longer term successful, is when things aren't working, and they will, you'll get to a point where you're doing very, very nicely, and then all of a sudden you go, whoa, things aren't working for me now. That's when you have to say to yourself, hang on a second, grab yourself by the collar, yank yourself back, dial back the size, dial back the positions, limit the damage. This is the big one, and I'm going to put it in red. It's the first one of red I've used for a while, but I think it's important because the very worst thing you can do, guys, is damage. The very worst thing you can do is to keep hammering away with a strategy that's not working, undo all the hard work you've done. If you've made all that money in the last month and the market conditions have changed and you're plowing away this strategy regardless, you're going to absolutely hate yourself for the fact that you've not only have you wiped out all the good month, but you've lost money again. Point is, when things aren't working, put the brakes on, back off, back off, back off, come back in when the strategy starts to be a little bit more in tune with the market conditions and that kind of stuff. So expect the setbacks, be ready for them, and more importantly, act on them. When it's not working for you, dial it back in. And the final thing I've got here is implement your position size increase plan when conditions are good. Whew. This is kind of a big topic, but let me touch on it quickly because it might resonate with you right now. And if it's something you want to hear more of, again, just let me know and we'll go more into depth of this kind of thing. What I mean by that is if you want to improve as a trader, you want to increase your position size, all that kind of stuff. Knowing when to increase your position size and knowing when to implement the plan of increasing position size, because you've got a plan for it, right? You've got to know when you're going to dial up position size. Do that only when the conditions are good. The worst thing you can do is to say, I'm not doing very well here, but I'm going to really dial up my size and make up for it. No, the best thing to do if you're dialing up size is to say, hey, I'm doing well here, but I can do better. Let me dial up the size. Let me improve it. Let me get into this a little bit more. And then I will see the improvements because I know I'm in tune with the market. My strategies are working. I'm doing well, all those kind of things. The worst thing you can do as a trader is to say, I'm struggling, but I'm going to undo that by really ramping up the size because there's obviously a reason you're struggling. So being honest with yourself, it goes back to another video we talked about that before. Okay guys, that is the final video in this little clip series. I hope you've enjoyed the top trading tips. Go and check out the previous videos if you would like to see the different things we talked about. If you have a comment and a suggestion for more things that we want to cover, more things that would make you a better trader, more things that would give you value, then leave a comment down below. And if you like this kind of video, give me that thumbs up. If you want to subscribe, it would be great. Appreciate your subscription. And the button for that is somewhere around here, somewhere in red. You'll find it, hit it, and then you'll be alerted to any videos we put out. Anyway, take care, guys. Good trading, and back with another video soon. Bye-bye.